Good Tuesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk KOH. It's a pleasure to be with you and a pleasure to be with my co-host. Man, glad I'm not having to fly solo today.
Amen.
Just to be real honest with you,
Yeah.
it's going to be nice to have somebody to chat with on this. That's for sure. How you fellas doing? Dwight Millard on Q Home Loans. How you doing?
John, I'm doing fantastic compared to all things that could go wrong, right?
Yes,
I'm doing
indeed.
okay. So
Good.
how are you
Glad to
doing?
hear. Doing fine.
Good.
Yeah, doing fine. It's it was a little bit of a heart stopper early this morning. Held tough, of course, as we always do. Been through this a million times and made sense out of it. It turned out to be the right thing to do because, we got a nice rally. We ended up doing fairly well in the market considering where we were. I mean, we still finished down 400 points or so on the Dow, but overall, when you're down 1,200 points and you're watching the you're watching the size of the trades coming through the algorithms. Normally, this, if you're seeing me on YouTube or the boys are seeing me, this represents maybe, I don't know, a 10,000 share block. Guys, these blocks were like a million at a time. I mean, just hitting the market and just give me whatever price you can give me, get me out. And it was it was an absolute just bloodfest right at the open. It was unreal. It really was.
I watched that. I figured, man, John is choking on his Cheerios this morning, man. You didn't even have those down before.
Boy,
that was crazy. Yeah. That was just crazy before it even opened. You look at the futures.
It really was.
Yeah.
Well, those are the ones I got up. I got up at 3:00 this morning, and I as I always did, shut off my alarm, which is on my iPhone, look at the futures, and I woke my wife up, and I went. She goes, "What is wrong?" I said, "Dow futures are down 940 points," and so got my workout done, came back, sat down to start working about 4:30, and I'm like, well, they improved about 300 points, so that was good to not have that, but. Yeah, it was just crazy. It's interesting to hear you guys, being on the outside looking in and seeing that. Let me ask you guys this. This is a really interesting question. Then we'll get to our what we're going to be talking about today. What's it like when, I mean, both of you are investors, but what's it like looking from the outside in when we have a morning like that? I mean, I know everything that's going on. I see it coming, that type of thing. So it's, I can't say it wasn't a surprise, but to that level, it was pretty good. But what's it like on the outside looking in when you see a market plunge like that so early? What goes through your mind?
I mean, for me personally, I've kind of taken the words and advice you've said over the years, which is, first of all, it's now. It's not the future. It's not 20 years from now. It's happening now.
Good job.
It's not
Good job.
smart in those moments to knee-jerk react. And, that's why we have people like you that can go out there, analyze the data for us so that I can keep selling real estate and not think about it. I mean,
right.
You can't help it because it's in the news, it's popping up everywhere, and curiosity kills the cat, right? You still want to look at things. But I find that when I get too focused on that kind of stuff, it ends up spiraling me a little bit. And then I'm like,
absolutely.
Yeah, I'm on the edge, and I'm not even doing it for anyone else. It's just watching my own stuff move. And I get distracted and negative and pissy. And so I'm like, you know what? It is what it is. I'm moving on with my day.
Yeah.
God bless you for saying that.
Yeah. No, God bless you for doing that. And thank you for the kind words. And that's exactly what you're supposed to do. That's exactly what you're supposed to do. Dwight, talk to me about your feelings.
You took my hands off the wheel years ago, so I just let you drive it. I mean, that's what we pay you for, right?
Yep.
Like Aaron said, I could let it defeat me, and I just don't. I see it. I've got kind of a similar thing. I got to go look at the bond market and figure out how I'm going to, navigate through that. So I'm just glad, to Aaron's point, you got to trust the professionals now. This is what you've all those years you've had.
That's right.
I can't even imagine. You joked around with me years ago, so I got a little. My own side account, right? That you were able to let me, I could buy individuals.
Your play money.
Yeah. It doesn't really do much, but I don't even look at it. And I don't even look at my account with you. I just.
You don't need to. Yeah.
No, it is just, so I try not to get, it's a lot of noise. It's a lot of noise, John.
It is a lot of noise. And Aaron, I want to go back to a point. I think that what you said that I think a lot of our listeners would echo, and that is if you think about it too much, it can spiral you out of control, right? And
Absolutely.
this, when I say that, I don't say that in a joking term. I mean it very seriously, because it can affect you, not only your pocketbook, right? You're seeing your net worth dropping second by second the way it was this morning. But then you start getting things in your mind like, oh my God, if I lose X amount of dollars in my 4K, or you know how retirees feel, right? Imagine being retired, Aaron, and you see something like that happen, and you go, oh my God, can I put food on the table next month, right? I just lost X amount of dollars in my account. That's the reality. That's how serious this stuff is. And that's why, again, it's so difficult these days, to do this on your own, because there is so much thrown at you. I can't imagine. I joke with my wife all the time about this. I can't imagine being on the outside looking in with this turbulence. Like I said, I liken it. I'll give you the best analogy, Aaron and Dwight. Best analogy is this. I can't tell you. It's probably been 2 years since I've been to a casino, and people always go, "Oh my God, you love to trade in your own account, and you're good investor, blah 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 blah." And they go, you probably gamble, right? You usually hear this from people out of town. You probably gamble when you go to a casino. I'm like, first of all, I never really go to a casino unless to go out to eat or something. But if I do, it's like, I mean, $20 hurts me to whatever, blackjack or video poker or whatever it is. But it hurts me more to lose that $20 because I can't control it, right? I can't control the market, but at least I can see what's going on. And if I make a mistake, it's my own fault, instead of just going, hey, put it all on black type of thing. And I think that's kind of what a lot of people feel like when they're investing in the stock market. They just go, you know what, whatever happens, happens. And it's again, to your guys' point, that's why it's great to have a professional in your life where you can go live your life, because boy, especially someone like you, Aaron, well, both of you, all three of us are in sales. I mean, let's just be frank. Mm-hmm. You have to be upbeat. You have to be positive. And if you're seeing your net worth dwindle in a bad market condition, that can infect, like you said, Aaron, the real estate sales, right? Your bread and butter. So
yeah, and I would say too,
it's interesting.
We kind of talked about this before, but in the past, maybe 10 years plus ago, when you saw these movements, they were long movements. Everything kind of did this, right? And now, I mean, it's kind of a positive way to look at it, but like in the last, I mean, especially in the last few years with like the algorithms and the computer analysis and everything that's happening, everything corrects itself so quick, and it's like everything just moves. So it's like the joke of Reno. If you don't like the weather, wait 5 minutes. It's like, if you don't like the stock market, wait a day or two, and it's gonna do something else,
or a minute or two.
Well, so it's like you just got to wait back, sit back, wait, be patient, and things move quickly.
John, and I'm surprised, that the market threw such a tantrum. Or, I mean, I understand the uncertainty, but I mean, if you really just sit back and you analyze what you're seeing, what you're thinking, I mean, this is all, this is me talking. This is a temporary situation, that the reason why we did this is a long-term benefit, right? I mean, can you just imagine Iran with the nuclear, I mean, that could just every day threaten to launch, I mean, that's uncertainty. And again, I'm not supporting this or that. I'm just saying, the market will, you always said the calmer heads will prevail. They'll understand. I realize that there's some, I guess some shipping lanes and things that are kind of compromised right now, compromised. But I mean, I don't know, you kind of just get up and you do what you do best. You go sell and.
Yeah, exactly. So this ties in perfectly, Dwight. I know you were just talking off the cuff here, but this ties in perfectly with today's show. And this is why I created this topic this morning: how the Iran war is affecting mortgage rates and real estate. You may be thinking, if you heard my tease throughout the day on KOH, you may be thinking, what in the world is this guy talking about? How in the world is Iran affecting mortgage rates and real estate? But to Dwight's point, this is exactly what we see going on right now. And so, Dwight, I'm gonna respectfully correct you in just one little thing, and that is, how can this be affecting everything? This time it is a little bit different, right? We always say this. This time it's different. We're going to talk about oil, as I did yesterday on the show, and so on and so forth. But my friend, if I were you in your shoes and you're trying to guide your clients on when to lock in and so on and so forth, because as Dwight's going to enlighten us on, we've had a huge upsurge in mortgage rates. You folks, you're going to be surprised how this has affected it, to my point. That's why, again, I wanted to do this topic. But it's not so much the nuclear weapon. It's not so much, bringing in a new regime in Iran or whatever ends up happening. but it's the fear of oil. And what people do not realize, we as consumers, we think of oil. Oh, it's important. Of course, it costs us, if we heat our home with oil, it costs us at the gas pump, so on and so forth. And we know how higher oil prices can trickle through the economy into other goods and services that we have to buy. But where we are now, what's the number one thing is that the three of us talk about every Tuesday and Thursday on this show, and I talk about it the other 3 days? Inflation. Inflation leads to the Fed. The Fed leads to mortgage rates. The mortgage rates leads to the real estate. But where did it all start, guys? With that O word, oil. And so the point we're going to get across today is you have to watch oil if you want to try to figure out what's going to happen with real estate and what's going to happen with mortgage rates. I know it sounds crazy, but that's the equation that we're dealing with right now that no one's telling you about.
But John, I brought that, I think it was last Tuesday or, the week before. I said, nobody's talking about $62.
Yeah.
Now it's higher, of course.
Yeah.
But it's amazing how we talk about it when it's high, but we don't talk about the benefit of it when it's low.
Yeah, absolutely. That's this is going to be a really, really great topic. So when we come back, we'll get down to what happened in the market. We'll get over to the bond market side. Dwight will bring us up to date on the mortgage side. And then bottom of the hour, when we come back, we're going to get into this topic again. Very fascinating how this war could impact real estate and mortgage rates. Let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Back to the Jon Sanchez Show on News Talk 780 KOH with Aaron Clark of Edge Realty, Dwight Millard of On Q Home Loans. Right. Here's let me give you a little snapshot first of all before what closed at 1, that's done. That's history now. Let's get into the pre-market session because that's where we got to turn our attention to at this particular moment because nothing we can do about what happened today. So right now, not bad. Down just 32 on the Dow futures, and Nasdaq looks like they're lower by about 11 and just about a 4-point loss on the S&P. So a lot better than this time yesterday where we were already down a couple hundred points. But let's go to today. All right. If you did not hear, folks, let's bring you up to date on some of the action. And we're going to get into our topic of how the Iran war is affecting real estate. Pretty weak in the pre-market session, down. Like I said, when I woke up at 3, we were down over 900. It was coming real close to a 1,000-point loss. Right before the stock market opened, going back to my notes here, we were down, I had to change it so many times. I'm going to say right around the 860 mark right there. So we're down 900, almost 1,000. Then we rebounded, like I said, then we came down and then back up. But who cares about that? What we care about is what happened intraday. Intraday, we fell basically 1,200 points. I'm going to round up here. That was the heart stopper. Like we were saying at the beginning of the show, it was a very, very abrupt sell-off. Not much you could really do about it. Sure, you could have probably got out. I didn't hear any problems about orders not getting filled on the other side like we have seen sometimes in history. But it was abrupt sell-off. And then we just kind of, started moving like that. I mean, we were down, over 600 on the Dow, on the NASDAQ, but everything turned around. I'll tell you what the catalyst is. First of all, let me tell you what this market did. We finished down 403.83% loss to 48,501. NASDAQ lost 232, 1.02%. S&P, it was lower by 65 points, 0.94% loss. And the Russell 2000 down 1.75%. Now, what in the world was the catalyst that turned this back? Well, here we go, boys. Let's talk a little oil since that's going to be our big topic of the day. So everything was just kind of going back and forth. The market, again, it felt like it could do another 1,000+ point sell-off or maybe recover a little bit. However, things changed. President came out. Who was he meeting with, Dwight? German Chancellor?
German Chancellor, yeah.
President came out. He was sitting down right in front of the fireplace there. Everything looked good. And he said that the U.S. Development Finance Corporation has been directed to provide insurance to carriers operating in the Persian Gulf after private insurers pulled coverage due to the conflict with Iran. He also indicated that the U.S. Navy could begin escorting tankers through the Strait of Hormuz. That was it. Ultimately, oil gave back a big chunk of its gains, and then again, we settled up $3.35 to $74.58 a barrel, as I said. Guys, that was the turning point today. That was a turning point in the stock market. It was a turning point in interest rates. It was a turning point in everything. So let's break this down. Yesterday, as I mentioned on the show, there was so much chatter, guys, about, oh my gosh, take it for what it's worth. You had an Iranian general come out yesterday, mid-session, and say, we're going to close the Strait of Hormuz. I started laughing when I saw it hit the headlines. Yeah, good luck with that one. Yeah, let's see.
Try that one,
at its narrowest point, it's 21 miles wide. Yeah, they think that I guess us Americans, that there's, it's like the Panama Canal. You got locks and, you can close the gate, right, and stop all the water from flowing. Doesn't quite work that way. So I went through a whole explanation on the show yesterday and talking about, again, no one can shut it. Not even the United States can shut it. It's a maritime treaty that it cannot be shut. Does the traffic slow? Absolutely. Yesterday morning, we had over 70% of the oil tankers. I was watching the GPS. Over 70% of the oil tankers in the Strait of Hormuz were just anchored. They're either at dock or they were anchored. Pretty dangerous place to be. So the president, very smart on him, saying, wait a minute here. The American people, the American economy, let's be honest, we really don't give a what about who's going to be the new regime. I'll just be really frank. Who's going to be the new regime in Iran? It's beyond our needs, our capabilities. We have other things to worry about. But what do we as Americans, and what does frankly the global economic world care about? Cares about oil. So very smart on his part to come out and go, because this is one of the reasons all the ships weren't moving yesterday or today is because all these insurance companies are going, I don't think so. I couldn't charge you a high enough premium to, replace your, your $200 million tanker, not to mention the value of the oil and the cargo that you're carrying. If a little drone gets away or a drone boat gets away and blows it up, and then we're on the hook. So president comes out and says, fine, we'll insure it ourselves. I've never heard of the U.S. Development Finance Corporation. I don't know if it's something new or whatever, but I guess it's a big insurance company because they're going to insure all these. Again, that should get the strait going. That will lower oil prices, and that's going to lead in again to our topic. But isn't that fascinating, though, guys? The main point is, and hence why I wanted to make this topic today and discuss all this with you, is oil is the key to this whole thing.
Well, it really is. And John, if we have time, Aaron had a great question. Remember, you wanted to go till this.
Go ahead, Yeah, my curiosity was if you have had kind of an eye on the stock market in China and how oil's impacting their market, because there's a lot of rhetoric and stereotype sort of inquiries on how it should affect them one way or the other. I'm curious, what you've seen.
Excellent question, Aaron. I don't know how it's directly affecting their market. All I can tell you is their market is not being, their stock market, the Shanghai, not really being affected all that much. If I remember, it was down just, 1.3, 1.5, something like that. It's getting ready to start trading here in a minute. But here's what we got to remember, Aaron, about China. Do they play by the rules as far as buying oil from legitimate countries? No. They buy their oil. It's black market oil. They've been buying it from Iran. They've been buying it from Iraq. They buy it from whoever's going to give them the best deal. So I am sure here's the thing, guys. This was telegraphed. We just didn't know when the rockets were going to fly, right? I mean, you look at the size of the battle group that the president has been building up for well over a month, right? That is a large battle group just to go set offshore and kind of be intimidating, somewhat like what they did in Brazil. I mean, yeah, they flew some jets and things, but that was more of an intimidation. This was a big and is a very, very big. I saw this list last night on I think it was CNN or something of the amount of aircraft and artillery and ships and everything, the satellites that we have pointed at Iran. I mean, they have no choice. They have no Air Force left. There's been 10 of their naval ships are now sunk. There's nothing left. I don't know what else we're going to continue firing at other than, the Houthis and things like that. So I don't see any problem. And the point I was going to mention to you, Aaron, the reason I wanted you to ask this question live on the air for our listeners is you have to remember, we're talking about ships. The United States of America is a big ship. China, even though they're a massive economy, they're really a speedboat. And what I mean by that is the Chinese government can intervene in a blink of an eye. They can weaken their yen. They can strengthen it. They can interject capital into the system. They don't wait for a monthly meeting with their equivalent of the Fed. If they see any problems of economy destabilization, they act immediately. And so when you see that their markets are only down, like I said, a little over 1%, they're not complaining about not having oil. They're getting all their oil off the black market like they've always done. They'll continue to do. But as far as their economy, you can't really get a real accurate, truthful read on it because the government is there as the backstop the whole time. You think our government backstops our economy? It ain't nothing, as the saying goes, compared to what the Chinese government does.
So have you ever seen anything have some sort of a tremendous impact on the Chinese stock market?
Only when they start having problems with either an economic slowdown, like they just got out of a very, very bad economic slowdown. Some of their stimulus measures did not work for a change, like, basically lowering interest rates. And what they do is they go after the brokerage firms, for example. They'll say, okay, or let me rephrase that. They'll go after the banks and say, okay, I'll always pick a number. You 100 banks out there, we want you to tighten your lending, right? If they start to see inflation go up, they tell the banks, which essentially are all government owned anyways, say, Tighten up, you're not lending money. That slows down the economy, and vice versa. When the economy is struggling like it recently was, they come in, they tell the banks, open up the floodgates, start lending money out. So that's how they do it. But again, it's at the blink of an eye, Aaron. They don't wait around for, like I said, months or even years, like Japan especially. They will move very fast. And so you never really have a true accurate assessment of how their economy is doing. You speculate the best that you can. Yeah, it's if this oil starts flowing again, this is going to calm things down dramatically. And that will be very good for your guys' world. It'll be very good for my world. So oil is the key, and hence why we're going to talk about oil and how it's affecting the real estate market when we come back. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH with Aaron Clark of Edge Realty, Dwight Millard of On Q Homes. All right, we're going to get into our topic, how the Iran war is affecting, or could, not, well, it is already affecting. I was going to say could, but it actually already is. What am I saying? But let's get back to the market again after a 1,200-point plunge not long after the open today. Finished down 403 on the Dow, just a 0.83% loss. NASDAQ down 232, 1.02%. S&P finishing with a loss there of 65 or 0.94%. All right, let's get into our topic. This is going to be an interesting one. So this is what I want everybody to be thinking about. How in the world can this Iranian war affect real estate? How can it affect mortgage rates? Well, once again, $3.35 gain in oil today, $74.58. Gold down 187 an ounce to $51.2330. Dwight, you only ended up with a 1 basis point increase on the 10-year Treasury at a yield of 406. But how did mortgage rates do, my friend? Yes. Not so much today, but really yesterday.
Yesterday. So, John, I mean, what's interesting is that you're right. We had a little bit of recovery as well, like you did in the stock market. But let's go back just a week. I like to put it in perspective. A week ago, we were bragging about 599. Remember that?
That's
and
right.
Now we finished at 6.13 today on the average mortgage 30-year fixed.
14 basis points in less than a week.
Just in a week, yeah. And so it's a horrible trajectory. We were talking about it. Even Aaron was saying, people now hear the news under 6. I mean, those are the headlines. Now we're over 6 again, the headlines. So, hopefully this is a short-lived experience here. But
okay, very good. Now, let's start putting the pieces of the puzzle together to answer the question, how can oil affect my real estate? All right, so we need to set some facts straight, just so everybody's on the same page. Okay, so here we have oil. Again, I remember I was joking this morning on the stock updates. It was just, not long ago, a month, 2 months, maybe somewhere around there. We were joking that oil broke 60. It was at $59 a barrel, and boy, things felt great at the pump. Remember, even Trump came out when we hit even lower than that, and bragging about, hey, we're under $3 in some parts of the country for fuel and everything, and yeah, felt great at that point. But how quickly things can change. That's the problem with oil. It's a global commodity. But we need to set some points straight here. Let's go back to the Strait of Hormuz, just to bring everybody up to date. So if you look at it again, about 20% of the world's oil flows through the Strait of Hormuz. Dwight, you dug up some very interesting stat during the break, and that was China, to Aaron's question. China, what was their amount that they bought from Iraq last year?
From Iran, 520 million barrels just in 2025. That we know of, right?
That we know of, yeah. That they quote report. Yeah, right. Exactly. Okay, so back to the Strait of Hormuz. Massive oil flow, 20% of the world oil flows through there. Once again, it can never be closed. The president announced today, hence the reason the stock market rebounded, that the U.S. government's going to basically insure these tankers, from going through there, plus provide Navy escort. Now, let's keep in mind, we need to reflect on something, guys, and that is back in, when the June Iran war started last year, leading up to that, we all have to remember, Iran is pretty capable of flying drones, and a lot of drones, and a very fast amount of drones, and hitting our ships, and they have the drone boats. Now, we're smarter this time around, I think. I think that one caught us off guard last year. But remember, that's kind of how that whole conflict really got pushed up also, because so many ships were getting blown up and sunk and so on and so forth. I just wanted to throw that out there. Hopefully that won't be the case this time. But at least, we've got our Navy there to escort these ships, get that oil flowing. Now, oil prices should start to nudge down if that is the case. And especially since we're now, and again, the details are sketchy. Who knows how much we're really insuring or not. Anyways, it made the market move. Okay, now let's get down to the real estate side. Okay, guys, here's the way the numbers work out. according to the latest data that I could find from the U.S. Bureau of Labor Statistics, the BLS, that's the same organization that produces the non-farm payroll numbers, overall accounts for between 6 to 7% of CPI, Consumer Price Index, the measure of inflation on the retail side, 6 to 7%. Gasoline, 3 to 4% of CPI. Fuel oil, 1/10 to 2/10%. Other petroleum products, very small. So total direct related influence of oil, 3 to 4% in CPI. Okay? Pretty important stuff, right?
John, is that equate, which is a huge number, does it equate, when you talk like that, it's much higher in a personal's, a family's CPI, correct? You're talking globally, right?
Yeah, because I'm not talking PPI. I'm not talking wholesale. Yeah, I'm talking right. And the reason you're so correct, Dwight, is because people always forget how many products that we use. It's not just going to the gas pump, but how many products we use for clothing, you name it. It seems like it has some form or fashion of oil in some part of the production process. And that's when we ran through higher oil prices before, that's what a lot of people forgot. It's like, well, wait a minute here. Why did my favorite shirt go up? Well, and depending upon the product it's made out of or the material, there's some petroleum based product in there somewhere. Yep, you're absolutely right. So oil itself, again, about 3 to 4% of the CPI. It affects transportation. It affects food. It affects manufacturing, as we said. So what we call this is really the indirect inflationary impact that oil has on a much larger number. Now, here's the light bulb moment I want all of you to think about. All right, so here you are, Dwight, mortgage banker extraordinaire. You were just so happy. Life was starting to look up for you, like you said a week ago, 599 30-year. Would you say we were today? 614?
613, 613.
613. Yep. Completely out of your control. If higher oil prices remain for longer, what does that mean? Higher transportation costs, higher building materials, Mr. Clark, higher utility costs, all of us. So what this could do is reignite the inflation fear that we were starting to subside on. Right? We were saying up until this conflict began, hey, 2 interest rate cuts this year, maybe 3. No one's as aggressive as Dwight with his 5 predictions. But now, if inflation kicks up, because 3 to 4% of the CPI calculation is oil related, so oil needs to stay up. By the time they do the, essentially the March CPI data, so we're talking probably April, if inflation remains up, or I should say if oil remains up, then inflation will remain up. And then now, guys, we're only a couple months away from what was going to be expected as the first interest rate cut by the Fed in June. That does not give them much time. My fear that I'm not hearing anybody else say is, we get the data in, like I said, we get the data in April for the March CPI. It's hot. Then the Fed's going to come their June meeting. Well, look, we had this big spike up in inflation. Yeah, we know some of it was attributed to oil, et cetera, but we're going to push off a little bit. Not this June meeting. Maybe we're going to push off to July or August, because they don't like to react to one report.
Yeah.
So that's
John, I thought there was a lot of conversation that they might even do it 2 weeks from tomorrow. Right? I mean, wasn't there some March
I didn't see anything about that.
Their March 18th? Now it's probably pretty much off the table.
Yeah,
now.
I didn't see anything about that. Yeah. I don't know. The street consensus was June, so
maybe I'm just hopeful. Maybe I'm just being.
Yeah, you're trying to win your bet. That's what it is.
Yeah.
You had one of your Disneyland dreams, Dwight.
Yeah. Fantasyland.
Aaron, when we come back, real quickly, if you can talk about from a real estate perspective, how these higher energy costs could affect things, right? Because
absolutely.
That's input costs into the price of a home. Let's wrap it up with Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Aaron Clark of Agility. And Mr. Clark, can we get your phone number, sir?
Yes.
Perfect. Mr. Millard on Q Homes.
Yeah,
how would your phone number be? Beautiful. All right, we've been talking about how real estate can be affected by the Iran conflict, right? Hopefully I've connected the dots for you. If not, I'll go just do it one more quick time here. You've got higher oil prices because of the conflict. Higher oil prices can result in higher inflation. Higher inflation can result in the Fed not being in a hurry to cut rates. So therefore the bond traders start nudging up these rates. I'll just share with you some behind the scenes. I was talking with Dwight during the break there, and I said, I know you probably didn't get a chance to listen to the show yesterday, but go back and listen to it, because I think I did a good explanation on why yesterday the 10-year yield was up 9 basis points on a day where we have the first day trading after the war began, and it was a very, very unusual circumstance because the dollar strengthened. Everyone started piling into the U.S. dollar. But the bigger issue was, once again, because of oil. Look at this common theme, guys. Because of oil and the fear of inflation, the bond traders went up. I'm going to drop these bonds like a hot potato. I don't want to own a bond if inflation is going to go higher. So what did they do? They sold the bonds heavily yesterday, massive volume, and that drove the yield up.
Which normally would have been the opposite, right? The flight to quality, right?
Yeah. If this was a conflict that had nothing to do with oil, with a non-oil producing country, you would have seen exactly what should have been normal. But I just want to get that point out there. Aaron, let's quickly jump to you. You watch, of course, input prices into new homes, into housing tracts, because it all trickles through. I mean, if new home builders, if it's costing them more to build a new home, eventually those higher prices are going to transcend over into existing homes, et cetera. Give us your opinion on if these oil prices hang up and what they can do to construction costs, et cetera, and real estate in general.
Yeah, I mean, our country's ran on oil. I mean, wood, everything that we use for building materials comes from somewhere, and it's on a truck, and that's how it gets here. So we'll probably see materials increase in price, which means new homes especially are going to increase in price. I think much more than that, we talk about the impact that it has globally or even just locally on home buyers, home sellers, et cetera. The impact that isn't really measurable is perception, right?
Yes.
So what Dwight kind of alluded to earlier was when people are going to the pump and, a week ago they were paying in Carson just a little over $3 a gallon, not in Reno, of course, but, in Carson, for example. And now that, they go back to the pump and it's 75 cents more a gallon in a week. They start to see that impact, and it causes them to have a knee-jerk reaction and go, oh my gosh, what's happening? And then they start paying attention. They start getting demoralized and negative and pessimistic, and maybe I shouldn't buy, or maybe I should wait. And then at the end of a month or two, the credit card bill comes in and it has the total amount that they spent on gas is an extra 30% more. That has tremendous impact. That's a car payment.
But let's go even a step further, Aaron. A great point. Let's go even a step further. Remember last time we went through high oil prices? Remember that $100 plus? What happens? We felt it at the grocery store, right?
People
forget.
Yeah,
got to get those groceries,
everything.
Get the vegetables out of the fields, and you got to get from the distribution facilities. It's all this thing called oil linked. That requires it.
It's the blood system of the body. Is oil is the blood system of the world.
That is a great analogy. That is a great analogy. Dwight, wrap us up. What's your advice for people sitting on the fence right now as far as what these mortgage rates are doing?
Well, John, just stay vigilant, I guess. Listen to the show, follow what's going on. I'm hoping this will be kind of ironed out sooner rather than later. But, if you're still looking, just get with Aaron, get with, Corey, and keep the wheels going. You don't have to pull the trigger right now, but at least you can start looking and weighing your options out there. But
yeah, when this thing does turn, and again, who knows? And I started the show yesterday, and I was real blunt with everybody, so I apologize. But I said, I'm going to tell you the best piece of advice right from the beginning of this show, and that is, no one knows what's going on. I don't know. No. I listened to some phenomenal Wall Street webcasts yesterday, institutional level. They don't know. But the bottom line is exactly what you said, Dwight. Be vigilant. Understand what's going on. Be prepared. Don't change any plans at this point, because these things, they happen fast on the downside, and they can, as we experienced today. I mean, come on, guys. To come back essentially 1,200 points, or not 1,200, about 800 points or so from our worst level in one trading session. That just shows you how volatile. People want to own the stocks. They want to own the bonds. They want to drive rates down. They want to own real estate. Again, depending upon how long this will last, just take a deep breath, diversify, stick with these phenomenal gentlemen on this call, and everybody will be fine. We'll get past this, I promise you. Great job, fellas. That was a lot of fun. I can't believe the hour is over already, doggone it. But we will do it again tomorrow on the Jon Sanchez Show. See you, boys.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited, an equal housing lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.